Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat and corn. I'll start with Chicago wheat. In the middle of August, the rise we'd seen since early July was finally capped by the upper tine, currently 796, of the March to July bullish shift pitchfork. This is a shallowly bullish pitchfork, but one should not underestimate its power. Since then, prices continued a somewhat stuttering move lower, being held up for a time by the middle tine, currently at 710 of the same pitchfork, in combination with the lower tine, currently 730 of the more steeply angled bullish Andrews pitchfork, for the same move. I'd like you to keep that lower tine in your mind, the number for it, which is at 730. As it plays a more recent role here as well. Anyway, prices ultimately punched down through both these supports, thus breaking the bullish Andrews pitchfork, or so it seemed. What finally stopped the decline was a multitude of factors. The push down below the short medium moving average, currently at 717, and the medium moving average, currently 699, doubtlessly eroded the bearish incentive, which was also stymied by its own reluctance to take on the shallowly rising long moving average below. That's currently at 674. Then there's the 50% Fibonacci line at 675, and the big old 50% Fibonacci line for the 2012-2015 move at 670. All this in early September. However, the chief reason I suspect, not only for that halt, but also the recent turnaround back up, has been the 50% Fibonacci line for 2021 at 689. It was not the chief reason. Well, if it was not the chief reason, then it was certainly a major one. Okay, so last week's prices were turned back up, moving through the medium and short medium moving average, and also the middle tine of the bullish shift pitchfork, and even back up over the lower tine of the broken bullish Andrews pitchfork. Now, earlier I'd asked you to keep this lower tine in mind, and the reason why is that though the bullish Andrews pitchfork is broken, the market has seemingly still started to adhere to this lower tine, thus giving it a chance to show the bullish angle attack for this new move back up. Additionally, all this recent action has given me the chance to draw a new bullish Andrews pitchfork for the July to September action. Thus, the lower tine, currently at 711, is also giving a complementary indication of a slightly more acute bullish angle of attack for the market. Now, we'll have to wait and see if this new bullish Andrews pitchfork works out, but it is promising. Where does that leave us with the big picture? Well, I have recently pointed out how we may, possibly, have a very, very large double top, Adam and Adam type, formed over 2021. Well, this recent pullback up deals that seeming fatal blow, as though the lower tine of the bullish March to July Andrews pitchfork has been broken. It has still reasserted itself with the help of the 50% Fibonacci line for 2021, and the middle tine of the bullish pitchfork, and the avoided support in the 670 to 75 area. Thus, as I alluded to 2 weeks ago, the pitchforks need to be dealt with, broken properly. Otherwise, they would control what will be happening next. Chicago corn. As I've previously mentioned here a few times, the most important feature here was the move down below the long moving average, currently at 554. This break below the long moving average hasn't happened since really November 2019. The questions last time that I asked was, would the market exploit this move lower, and if it did, which pattern would it choose? The first bit appeared to be easy, as we had a weekly key reversal down 3 weeks ago. However, prices did not follow through lower, or rather they did, but only until 2 Fridays ago on the 10th, when the market executed a rapid daily key reversal up. By the middle of last week, prices were back up again over the key combination of the 61.8% absolute Fibonacci line at 525, which is also the 2014 high. Since then, prices have hesitated around this 525 level, and also been capped by the broken early June to date downtrend, currently at 536. Now, you may think, why am I keeping this old broken downtrend around? Well, it was as I explained last week. I posed a question on which pattern or patterns were and are showing out there. I explained that there seem to be two, maybe three main patterns: a sideways triangle and two descending triangles. Now, the sideways triangle was formed on the top side by the two-pointed downtrend, currently at 562 from the start of July, and the broken, well broken indeed, August 2020 to date uptrend, currently at 568, with its recent and now diverging partner, the long moving average, currently 554. This pattern has, for starters, finished, as the apex was formed earlier this week. However, it had a potential target X in the 509 area, which was achieved 2 weeks ago. The next two descending patterns or triangles are related. The smaller one uses once again the early July to date topside downtrend, and on the downside uses the flat base of the previously mentioned key combination of the 61.8% absolute Fibonacci level at 525 and the 2014 high at the same level. This now has an initial target X1 below in the 475 area, with a secondary target X2 in the 425 area. Interestingly, right on the 50% absolute Fibonacci line. The second larger, if you will, pattern uses the higher if broken early June downtrend on the top side, currently at 536, and the same base of the 2014 high in the 50% absolute Fibonacci line. This would give an initial target X3 in the 463 area and a secondary target X4 in the 401 area. This descending triangle is interesting and perhaps timely, as it will reach its apex the week after next. All this is not a done deal, as we could still have a pullback, but the pressure in the ammunition was and still is, despite recent hesitation, very much for the downside. And there's the rub. Why are we having all this hesitation? What is causing this? Is there something more going on? Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final bit.